Well, hello everyone. Welcome back to another Market Open live stream. So it looks like we've got Jerome Powell making some comments today at a town hall, which will be very interesting. We're specifically looking to see a time frame for when is it likely that we might actually see rates start going up. Given the performance of sort of the market and growth in China and growth potentially seeing a little bit of a slowing inflection point, it makes you wonder maybe that rate increase isn't anywhere near as we think it is. We've certainly got a little bit of anxiety in the markets as well. Yesterday we talked about how I believe a lot of this anxiety had to do with Jerome Powell, not only his town hall, but we've got Fed minutes not so much, and then the Jackson Hole Symposium coming up next week. So there's a lot of news coming up within the next week from the Fed, but then again, it could just be more of the same of Jerome Powell. We've made some substantial further progress, but hey, the course of the market and our decision remains contingent upon the Delta variant. We essentially just hear what we regularly have heard for a while. Now, what's really weird is that at the same time we see the market sort of heading in this red direction where we're seeing indices come down, 0.5% or so. We have Treasury Yields also still coming down, which is very odd. Right now we've got the 10-year sitting at 1.2467, and generally, just to kind of explain why it's a little bit odd, is generally what we saw this year here. Let's go ahead and draw some arrows. Let's go for it here. There we go. So generally what we saw this year is right here in February when we saw this insane acceleration of the 10-year. At this point, we were under the impression that, oh no, or at least the market, because we knew this clickbait was coming, right? We've been talking about this since November and December that, oh my gosh, next year we're going to be going through some crazy inflation clickbait for quite a while. And then we did. And sort of these fears manifested in the market by having essentially the 10-year Treasury yield skyrocket up to here about 1.7, 1.75 intraday. And this was associated with tech and higher valued stocks selling off. But what's so weird is now we sort of have this reverse, this collapse in the 10-year. And it's also associated with tech and high yield selling off, because while this was a fear of an overheating market and rates going up too fast, this was a fear of maybe a little bit of an underwhelming market and not too strong of a market. So you kind of lose either way. But anyway, let's go ahead and take a look at a little bit of the market in terms of what's going on here, because we certainly have some changes here. Yeah, I see a comment here that somebody mentions that it's possible that these are earnings, that we're seeing this because of earnings. It's possible because one of the things you got to keep in mind is when you have earnings, really, really good earnings, there's this impression sometimes that, well, how much better can it get? Like how much more can these earnings really keep going? And this is where sometimes we actually end up in these weird situations where, yeah, earnings are coming in great, but we're actually not necessarily seeing stock prices go up because the market's actually expecting more than the greatness we already have, or that greatness to last longer. So it's kind of like it's almost like this market's just been on this sugar high, and that 2020 was the biggest sugar high, and 2021 is the sugar crash. It's like you're still doing good because you had candy for lunch, but you had a little too much, and now it's kind of like I got a little tummy ache. I don't know. It's weird. So let's go ahead and look at some of these stock ticker symbols as usual. The program for the amazing programs on building your wealth, stock buy sell alerts, link down below, 40% off lifetime access. Which, keep in mind, I'm going to be doing, if we keep getting this market crashing, I'm going to be doing a lot of buying once I feel like it. I've really been waiting for some kind of correction in the market. And then, of course, you could always get a free stock with Public. You go to metkevin.com/public to get a totally free stock when you sign up and download the Public app. They do not sell your information like other brokers do, and you can socially share what you are buying and selling. Okay, so let's go ahead and get started. Looking at our watch list here, let's look at what's losing first. So first of all, it looks like in the pre-market here, we've got a real burn sort of on Arcimoto. Arcimoto down 14.35%. I've got covered calls on my Arcimoto position. So it looks like right now I'm farming that credit. We've got Microvast down 13.53. Roblox coming back down to 74. Remember, Roblox was really a $64, $65 IPO play. So personally, I'd like to see an IPO discount. So if we could see this go under those IPO prices, it wouldn't be so horrible, in my opinion, for a buying opportunity. We've got, look at the Spirit Airlines down 4.53%. Now, you do keep in mind that Spirit Airlines had a massive period of, what should we say, massive period of cancellations. I mean, multiple days in a row of cancellations. And you really had sort of this disaster of a reputation for Spirit. I mean, I was flying quite a few times over this last week here, and when it came time to see Spirit flights, we're like, oh, those are going to get delayed or canceled. And flights have been bad. I mean, a lot of flights just get delayed. It's very, very bad and inconsistent right now to fly. Gosh, yesterday I was on a Southwest flight. There's no way they made money on that flight. I mean, it was a plane that was, maybe what's a usual 747 have, like 150 seats or something like that. But anyway, there were like 49 people on the plane. It's like, how are they going to make money? And this is a Sacramento to Burbank. I don't know. It's odd. So, okay, I would say hold on with questions, and we're going to go through these, and then we'll come back with questions here. So we've got Neo also down at 37.49. We're seeing a lot of pain sort of in the Asian stock sector, not uncommon. A lot of pain in the SPAC sector. I see your $10 donation here. Thank you for that. Yeah, I'm not personally aware of a SPAC index, but I would also stay away from SPACs right now. And we've been talking about that over the last couple months. Excuse me. That really the higher valuation in SPACs are the ones that are sort of at the bottom of the list right now. That actually includes a stock like SoFi, which is one of the reasons I was so fanatical about selling massive puts on SoFi, because the credits are so juicy. The same is probably true today. We'll take a look at that. But anyway, let's see. API is an incredibly sort of devastating story of the death, in my opinion, of Clubhouse. I was briefly in the stock. I sold after I saw Clubhouse rotating to the toilet, and this stock has just literally been straight down since. It's been something else. Yeah, Moderna. Personally, I believe became a momentum play when it ran over 400. I think it's a little kooky. So we've seen a little bit of a rotation down here on Moderna, but yeah, something to keep an eye on. We've got Loews down 2.75. It's actually a lot for Loews, 2.75%. We've got AMC was up 6.6% yesterday, down 2.5 today. So a little bit of give back. You've got Tesla down again. Tesla was down 4.35% yesterday. Presently down to 670, going right back down under those 700 figures here. You've got Palantir just under 24, down a couple percent. Lemonade's almost about to break under 70. I'd like to see this under 60 again, personally. Some of the numbers are just so high right now. You've got Wish sitting at 672. That was a big momentum play for a period of time. I think you still have some leftover hodlers in it. And it's one of the reasons you're kind of seeing the slow bleed here. You've got Etsy. Etsy Etsy holding strong at 187. My gosh, how is Etsy still going at 187? My goodness. Let me see here. Did I close at my Etsy ones or my Enphase ones that I closed? Let me see. Because I had options on Etsy and Enphase. It was... Oh, good. I closed my Enphase. I haven't closed my Etsy yet. Oh, interesting. All right. Fisker rotating down a bit, back to 1391. We've got Airbnb getting close to those IPO prices. There's Southwest. I love. We've got Wynn coming back down to 92. Wouldn't be I'm personally expecting this to get down into the 80s here. But what I really want to see is what's it called? COVID cases. So here's the thing: we left off indicating that COVID cases really had this surge last week. We got our weekend case numbers, which are always lower, and what we really want to see is the current case count lower or higher than last Monday? That is the big tell, and we're about to find out. It is higher. Oh, that's not good. Ugh. Yeah, okay, that explains a little bit of the pullback here in the market. Look at that. So let's go out to 30 days so you can see this a little bit more visually, folks. This is look, you always have lower case reporting on Sunday and Monday. Sunday and Monday is always the low, and then you get Monday is the start of the trend, and then Tuesday reporting is the start of the trend, and then Saturday is usually your peak. This is a big old jump right here. I mean, last Tuesday we had 178 cases. Before that, 136. Before that, 93. Before that, 59. Right now we are at 252. No way. Really? Wow. Hold on a second here. New cases. Why does this? Hold on a second. Hold on here. New cases. Why does this number seem so different? No, that's the one. That's the 7-day. They're showing the 7-day here. That could be then. Yeah, they changed. This used to be the day count, but then they changed it to the 7-day average. Let me see if I can get just not the 7-day average. Let's see. Yeah, I see that line. Hold on. I don't know if I can get over it here. 7-day. Yeah, 252,000. Wow. That is true. Hold on. Let's see what this news is really quick.
Industrial production up 0.9%.
Oh, that's good.
That's almost double the.
Yeah, because yesterday Chinese industrial production fell substantially. But wow. That is definitely a shift there in COVID cases. Owie. Okay, then we have Win, Enphase, Proterra, EXP. All right, what else here? UWMC, Roku, Pinterest, Gap, AMT, Trade Desk. Trade Desk actually holding up decently. It's only down 1%. Yeah, Coinbase. Oh wow, Coinbase back in the 250s. I mean, this just went nowhere. Jeez, that's I mean, I thought we were like 270 or 280 the other day. Whatever. Crazy. Okay, so Redfin at 49. All right, what is anything doing good? Let's see. Oh, look, Beachbody at $7. You've got MP Material at 34. It's been there for months. Dave & Buster's 35. Arrival, Matterport, Honest, 23andMe doing decently today. But then again, I mean, it's $7.75. You know that like I did this analysis on 23andMe, and the Nasdaq's block. They actually picked it up. Oh, sorry. Hold on. Let me get off of this here. There you go. Yeah, look at this. If you go, there you go. VGAC's SPAC deal with 23andMe is too speculative, and analyzing the SPAC deal with Kevin on his channel, and they basically break down my video on this. And I thought that was really cool. I'm like, whoa. But anyway, I'm like, yeah, no, it's overpriced. Sorry. Anyway, let's go ahead and grab crypto here. So we've got a little bit of a pullback here. We are at 46.4. Did run back to that 47 line. That 47 line continues to get reiterated here by markets. It's not a surprise. We either dance on it or bounce off of it. We did yesterday fall to about 45.2. Little brief buy the dip opportunity here, although it's not too extreme. Looks like this 45 level is one that we continue to hit here. Look at that 45.5 here. Yeah, around this area, around this 40, it's just not as consistent as you'd like to see. There, 45.670. That's a good line right there. 45.670. Look at these touches. Touch, break, touch. You know, touch. That's a pretty good line here. There was a resistance over here. Yeah, there's some value to this line. We'll leave this line here as well. It's good to know we're sort of in this channel now. All right, what else we have? We got ADA. How's ADA doing right now? ADA 207. This one just been kicking butt. I mean, it's obviously in hindsight, it's easy to say. It's like, oh, should have loaded the boat more down in the bottoms. But we did buy. I did buy and sent alerts. But right around here, like what was it, 108? Yeah, 108. Bought sort of the 125, 130. Bought over here again at like 110 or 104 or whatever it was. But this was incredible. Just look at this explosion that Cardano has had here. Really incredible. All right, let's go ahead and see what kind of top news we have going on here. I mean, we know a lot of it lately has been Afghanistan, and boy, oh boy, that has been very sad, very, very sad. So let's see here. Let's grab this. Okay, perfect. So airport remains tense. Women can work. Taliban says women can work, shifting from stance before 9/11. Well, I mean, I guess that helps a little bit. It doesn't change the fact that people don't believe them. You know, like publicly they say, oh yeah, women can work, but people don't really believe them. So, but you know, hopefully that ends up being true. Drop in U.S. retail sales underscores shift to service spending. Well, here's something that Kathy Wood actually predicted about. Which one was it? I was at a rally in Fresno when I did a video on this, on her commentary on this. Basically, that the people are stuffed out. People have the stuff that they want. You know, they had plenty of money. Let me log in really quick too. They have plenty of money. They don't necessarily need more stuff. Now's the time for services to run. And now this has been something that has been pretty consistent in the market. We've been thinking about a lot of this potential for service inflation. So let's see here. Hold on a sec. All right. So we've got drop in U.S. retail sales. The 1%, 1.1% pullback in July was led by auto dealers, e-commerce. Hold on a second here. Let's take a look at this. So this is interesting here. Receipts at restaurants, bars increased, but at a slower pace. So you're also seeing an inflection point in restaurants and bar spending at the same time as you're seeing this pullback in basically people buying stuff. Now, this is actually something that the Federal Reserve predicted. It wasn't necessarily just Kathy Wood who mentioned people would spend a lot and then spend less. Jerome Powell has been saying this for well over a year. Jerome Powell has suggested that, look, when we have the reopening at first, we're likely to have this surge of spending, but that's likely to start waning. And based on just this headline here, this receipts at restaurants, bars increased, but at a slower pace, looks like we're starting to see that inflection point start bending to the downside, or potentially towards the downside, at least flatten out. Let's take a look at some more detail here. U.S. retail sales fell in July by more than forecast. And this, by the way, is something that we also saw in China, is that retail sales are coming in softer than expected, and the slowdown is coming at a faster rate, reflecting a steady shift in spending towards services. Remember the differences between goods and services. We got gas in our economy, right? Goods, stuff, services, or you know, like having people wash your car or come clean your house, or, you know, what real estate agent services, right? Anyway, and indicating consumers may be growing more price conscious as inflation picks up. This right here is actually probably the most beautiful thing that they could have said in this particular article. The capacity for businesses to raise prices is limited by the people's willingness to pay. So as soon as NVIDIA goes, we're just going to keep cranking up, you know, the 390-50 chip or whatever, then at some point consumers are like, no, I ain't paying that for a card, right? And that's good. You need that elasticity of demand essentially to be low, which means people's willingness to pay more as price goes up goes down very quickly. You want that to happen to actually help keep sort of the reins on inflation. See, there can't be inflation if we're all like, yeah, no, we're not paying more. You know, if we all protested, prices would actually come down. We could literally have J-Pow printing money, and we're all like, yeah, no, no, I'm not paying that, and prices will come down. It's great. Obviously, coordinating the market has been tried, and generally that's called communism, and that doesn't work too well. But anyway, this is a good sign clearly here that as a whole, the uncoordinated market, the free market, is saying, yeah, no, things getting too expensive. The value of overall retail purchases dropped 1.1% last month, following an upward revised 0.7% increase in June. That's fine. Median survey called for a 0.3% decrease, excluding autos. Sales decreased 0.4%. So a little bit more of a cutback here in July. Take a look at this, though. Folks, this chart should be absolutely zero surprise. Can you guess what the big bars are for? Stimulus 1, Stimulus 2, Stimulus 3. I kid you not. It's $1,200. It's the $600, and it's the $1,400. Remember, when I went to Prada, what did they tell us at Prada? They told us their best customers were literally people on unemployment or stimulus check recipients. And guess what expires in 2 weeks? Unemployment. Total receipts trailed estimates by, well, at least the federal unemployment boost, right? The state unemployment. Well, then again, that'll come up for expiration too. You can't be on that forever either. Total receipts trailed estimates by a wide margin as declines in motor vehicle and e-commerce sales weighed on the figure. This, by the way, this e-commerce sale plummet here is one of the problems. I don't know why this would be blurred. Hold on a second. We will fix that. But anyway, one of the problems that we ended up having with Pinterest, for example, just as another comparison, is we ended up with a substantial sort of slowing in the amount of time and money that folks were spending on websites like Pinterest or Etsy or Amazon. It's kind of interesting and also unfortunate, since those are some of my favorites. So let's see what else we have here. We've got the emergence of the Delta variant poses a risk to economic activity. Also true, potentially a reason that we might see prices stopping in their crazy run up. And this is something we've talked about on the channel before, that Delta could actually bring in a period of deflation. Okay, yeah, I don't know why the connection might be a little soft here on the live. So hold on a second. Let me try this really quick. Let's jump on over. Okay, hopefully that's a little better. We'll see what happens with that. I'm gonna make a guess that that's okay. All right. So yeah, we should be okay now. All right, continuing on. There we go. Okay, so I tried that. Okay, so we got about 90 seconds to market open, but let's keep going. Higher prices for things like groceries, meals out, personal care, and apparel risk limiting discretionary spending in coming months. This is true, limiting that discretionary spending while at the same time having Delta. Yeah, those are deflationary forces. A report last week from the University of Michigan showed conditions deteriorated to the lowest level since April of last year as inflation remained. This is the confidence index. So we're seeing confidence inflect down. People's willingness to spend rotating down. Stock futures going down, right? Results from Home Depot showed weaker than expected results and signaled a cooling in the home improvement boom. We're seeing car prices start rotating down, especially as they're affected by supply chain shortages. Folks, if you're wondering, why is the market slowing down? Why is the market turning red? Well, in very much part, it's because people are saying enough is enough. We spend ourselves to oblivion. Now we've got Delta concerns. It's time to chillax on the spending a little bit. We're not willing to pay high prices forever. And so we're actually going to lid inflation by not letting these prices run away, because we're voting with our wallets and we're not going to pay for it anymore. So very interesting. Keep an eye on this stopping of consumer spending, especially with Delta fears. Let's listen to the market open. Here we go.
Powell is very seasoned. And he's also someone, I never get any credit for being a good man trying to help people.
We'll find out more. Obviously, not an easy gig. There's no doubt about that. There's the opening bell and the CNBC Real-Time Exchange. And the big board, it's data and analytics company Spire Global, celebrating its listing via SPAC.
Look at how red that is. That's got to be about 90% red, by the way. Drew, I see you, by the way. I know you had some issues concerned as to whether or not you could appear. You are here. I see you. I've also disabled Wi-Fi in case you're concerned about, for some reason, things not showing up as well as they should have. That didn't help with the blurriness. We really is the entire broad. Is that true? How did that not help with the blurriness? Yeah, I is it really? It's still blurry. I don't know. Here, I know what to do. Hold on 1 second. It's gonna go black for. Is this any better? I'm gonna hope it's better. Hopefully this is better, so we could stop getting these complaints because I'm tired of your complaints. I don't want to hear it. I don't want to hear your complaints. I want to talk about the stocks. I want to talk about it. I'm going to talk about what's going on the market, like Arcimoto falling additionally. Is that better? Good. Look at that. See, folks, look, anytime it's blurry, all you have to say is, Kevin, press Command R. Press Command R, and you're good. It solves everything. Why would Command R not solve everything? Anyway, Arcimoto down 17% right now. That looks like a fall at the open here. Yep. Oh, ouch. You've got Home Depot we were just talking about, also kind of a fall at the open here. Let's go ahead and actually look at the charts. There we go. Arcimoto now down 18%. We just dropped another percent there just in the last few seconds. We are sitting at about Roblox dropping a 6.6% here. Neo down to about 37 here. We have Hut 8 Mining coming down. It's only slightly, still sitting at 663 here. 663, not that bad. The green side of this market just got smaller. We actually had more green a few moments ago. Yeah, well, yeah, and now we've got maybe what do we have here? A half page of green. So we got SoFi bobbing around 0 basically for the day, which is interesting. We have the big losers right now, shopping related. Look at this: Alibaba, Home Depot, Lowe's. Lemonade, more of a service, I would suppose, but Nordstrom's coming down a little bit here as well. Shift Technology is about to go into the 6 range. Remember, usually when Shift Technology gets to around like 650, the CEOs tend to start buying, which is interesting. Kevin, thoughts on Palantir buying 51 mil worth of gold? No, not much. I mean, I feel like it's kind of like a buy the dip there. Is a little bit of what we have there. So thank you for the donations there. Portfolios already. Yeah, let's go ahead and see. Let's see how Hood is doing. Hood. So, Hood's actually green today. That's very interesting. Hood's up 1%. It's possible that Hood's moving on this volatility. We are seeing more stocks start going green here. We're almost at a full page of green. So we are getting some recovery in some stocks. Looks like Faraday Futures trying to come out here. 23andMe trying to come out. We got SoFi coming up a little bit. We've got Matterport, Domino's. So we've got some movement here in stocks. Bitcoin, Ubiquity, these guys pretty much flat. Etsy 0.52. Okay, good. So we've got, let's see here, Open Door really just getting closed doored. It's now a bad joke. It's sitting at 1538. Not so great. Obviously, a Chamath's back here, not performing super well, but really none of the real estate sector stocks are in terms of these iBuyers. Zillow, Redfin, Open Door, these guys have all just gotten whacked. So pretty rough here at the moment. Let's listen to Jim for a moment here, then maybe we'll go farm for some other headlines here.
Kroger is a much better company. They managed to be able to localize the stores, which was...
I don't really want to talk about. It seems like anytime something's green, that's the one we're talking about. So I'm going to pull off that one. Let's go. What do we got over here? So let's see here. Delayed Wuhan report adds crucial detail to COVID origin puzzle. Huh. Okay. A research paper languished for a year and a half. What? I don't know that we really want to go into it, but a research paper that languished in the publishing limbo for a year and a half contains meticulously collected data and photographic evidence supporting scientists' initial hypothesis that the outbreak stemmed from infected wild animals, which prevailed until speculation that it escaped from a nearby lab. Okay. I'm going to come back and explore that later. So much drama over this, which I understand why, of course. But anyway, China tech stocks slump as the nation issues draft competition rules. Uh-oh. So China's latest moves to tighten its grip on the internet giant helped trigger a 5th consecutive day of selling in the nation's bellwether technology stocks. Ouch. Okay, what happened? So wide-ranging proposals released Tuesday. That's today. Well, is it still though? I guess it's probably still late China time. I don't know. What is it, like 7 p.m. or something over there? Oh, 9:35. Oh, that's close. Let's see here. It follows moves by Beijing to rein in the country's internet leaders in areas from antitrust to data security and ride-hailing. Yeah, Didi got whacked. Draft covers protections for IP and brand reputation, as well as a ban against using algorithms or fake reviews to promote goods and services, alongside expressly prohibited behaviors like exclusivity arrangements. Companies will also not be permitted to use technical means to interfere with their operations of rivals. Interesting. Investors concerned this regulatory reform is far from over, and that policies will continue to be introduced. Yeah, that's one of the things with sort of developing countries is you just never know how the government is going to respond to changes in markets or their perception of changes in the market. Look at this. We have Walmart. Walmart slowing e-commerce. This is interesting to me. This is a continuation of this concern over sales declining, essentially, right? So let's take a look at this at Walmart for a moment. Walmart, in my opinion, very much a representation or potentially a representation of what we've got with spenders. You know, the regular consumer spender, the unemployment spender, the stimulus spender. Let's understand Walmart a little bit. Walmart's pandemic-driven gains in e-commerce slowed last quarter, and bing, 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 danger. This is like the worst thing to hear at a company. Profit margin fell, raising questions about the retailer's ability to maintain momentum. And we know, what do we know about momentum, folks? Like every time you hear momentum, we did talk about retail sales plummeting. You do always want to associate momentum with one thing, right? What goes up comes down. Like momentum always does that. Underlying real growth maintains value or creates value, but excitement is temporary. Momentum is temporary. The company's U.S. online sales rose 6% in the second quarter. The company said on Tuesday that was down from earlier in the pandemic when soaring e-commerce demand routinely resulted in high double-digit gains. Online orders contributed only 0.2% to comp sales, compared with 6% a year earlier. Wow. This is the look at this chart here. This is the slowest gain percentage-wise in e-commerce sales that they've really ever seen since they focused on e-commerce sales. The deceleration took the shine off a broadly strong quarter with a 5.2% gain in the chain's U.S. same-store sales, excluding fuel, topping 3.1% average of analysts. Okay, good. So still overall great numbers, but that inflection point there in online sales, not that great. Walmart also raised its full-year sales forecast in part because of optimism over a crucial back-to-school shopping season. Be interesting to see how Delta affects that. The results muddy the picture for investors trying to determine whether the retail industry's early pandemic winners will be able to hang on to their gains following last year's demand for groceries, home goods, and other items. Home Depot had a similar issue, and that's why we're seeing sort of Home Depot and Lowe's fall a little bit here. We did have raised outlook overall. However, there's probably some caution from Walmart investors who had elevated expectations. And this is something we talked about, is that the market just had these insane expectations that people could just continue to spend forever and ever. But no, people have a willpower that says, no, I do not have to pay these higher prices forever. Then you do also have this supply chain overhang that continues to affect markets dramatically. And COVID just makes that worse. Don't even get me started about when you get a case of COVID out in China and what that does to the ports out there. It's a disaster. Shut down for a month sometimes. It's crazy. But anyway, we'll see how this evolves. So let's go back here. We've got sticks to look at. So Arcimoto no longer down that full 18%. So we got a little bit of a recovery here in Arcimoto. Let's see here. What else do we have? Yeah, 23andMe now zooming a little bit. up 9.43%. AMC just went positive. We actually just got a lot of stocks that went positive here. Looks like we got a nice little bump on the day here. SoFi is up about 1%. AMC's dancing to the upside a bit here. Look at that. GameStop coming back a little bit. Trade Desk pretty much flat. And the pain that we were seeing has started to slow its descent here. Tesla still down about 2.2% here. That's an interesting kind of recovery here. All of a sudden, starting to see things come back a little bit. Let's take a look at AMC on the minute here. Yeah, look at that. That's a nice run there on AMC. Not bad. You know, from 34.59, kind of a red open there. Seeing some nice green by the dip volume. You actually got Moderna moving up again. This one just blows my mind. No way. Yeah, you got 23andMe sitting around $8 right now. We've got Root going up a little. Li Auto up a little bit. SoFi, look at that. SoFi. Oh, look at that! Look at that perfect bounce off that 1471 level. See, this is how you know that support was legit. Is when it becomes its own resistance, which is unfortunate, but it's real. So we're gonna watch SoFi here. The volatility has come down, so you don't have as much of a juice, so to speak, as that you've had previously on the options. Well, let's take a peek anyway. I know these are pretty long out, but I just want to see here. For example, if you go to selling these puts here, let's see here. We'll do the trick from yesterday. 75. Let's see here. 40%. Yeah, it's not as juicy as what we've seen previously on selling puts, but and I think that's just as our implied volatility is rotating to the downside. But there's still some opportunities here to sell some puts, especially on a company that I think is very desirable to own in the long term, potentially own. Otherwise, just take the credit and get out of there. But wow, Coinbase up 1%. Okay, let's see what other headlines we have here. Well, we do have a bit of a recovery here. But then again, if you look at Arcimoto, it looks like we're pulling right back down into the gutter. Yeah, look at Arcimoto as almost your barometer for this disaster of really this pain. And oh no, it's better. We're recovering a little bit, and then now we're going back to pain again here, which is very interesting. Look at Roblox for a moment. Yeah, Roblox is feeling the same thing, bouncing off that 76.27. Again, another example of these lines working. The lines work. Always respect the line. You do have, looks like here, Home Depot down 4.75%. I mean, that's a nice chunk. It's a good old chunk to the downside there. Open Door down 6.8. Nordstrom 3.51. I see some of the comments here about TTC. Wow, really? Oh yeah, Tattooed Chef down, sitting at 16.11. Is Apple up now? Oh wow. Okay, take a look here at options for Tattooed Chef. It is a SPAC. I've never been super jazzed about this one, but I'm about to look at some sold puts. See, this would get me in at 14.20, which, by the way, if you like talking about options or like talking about more things regarding the market, we do have, of course, member live streams that you're welcome to join. Use that coupon code down below. The price goes up over time, but when you lock it in for as long as I do live streams, you'll have access to them, which is kind of cool. Of course, lifetime access to the content, which is fun. To end the live streams, I really enjoy the live streams. We get good conversations in. Then a lot of you have great ideas that come up too. It's great. So a little move up to the upside here on crypto. Crypto hanging out with the runners today. And that's why you're seeing Marathon and Coinbase, these guys moving up a little bit as well. But we're definitely seeing more green in the market here than we had. We're sitting at, what are we at now? 1, 2, we're about almost 3 full pages of green right now, which is nice to see compared to the virtually no green that we had this morning. That was intense. I am going to take a quick peek at the terminal here. Let's go ahead and see what top news we have here. See if there's anything special we can see that's going on here. Lines are on point. Oh, thank you for that. Right. Let's see here. Okay. Okay. Yes. Okay. We read about the change here. We read about this. This was retail switch. Mostly seen these here. Emerging market equities may get swept up in the Afghanistan storm. Yeah, we believe that, but generally we're focused on U.S. equities. Let's take a look at this. Talking about sales declines here.
Because of the confusion around the variant. How much is it really messing with the reopening? And the answer is it's messing it with it a little bit, for sure. Not necessarily a lot. We just don't know how long it's going to continue. Same thing with Home Depot. We get this argument, and Jim's absolutely right. These are great numbers out of Home Depot. Comp store sales up 4.5. Okay, we were expecting 5. Operating margins went up, by the way, 20 basis points. Its operating margins are still terrific for them. The transaction, see, this is a proxy for the traffic. This is the peak everything story. Everyone says, aha, you see, not as many people going into the store. All right, yeah. Average ticket was up, though, very nicely. Thank you very much for that. So, the important thing is just to see what's going on, up 11.3% for the average ticket. Those are pretty good numbers. Here's the problem with Home Depot. It's beating the Dow beating the S&P for the last 2 years, and year to date, it's up 26%.
Yeah.
It's a consistent earnings grower. PE is very consistent on this company, 20, 21, 22.
Yeah, but you got to be careful. It's the outperformers that aren't always the outperformers. So keep that in mind. That could flip-flop, in the next 6 months.
What's so frustrating about this, you have excellent numbers and you still fall into the cynical, well, it's just peak everything story, essentially. Another peak everything story. Did you see the global fund managers? We follow this every month from Merrill Lynch. It's full of peak everything sentiment, essentially. Peak growth. Most of them feel that this is the peak growth period, peak profit period. Importantly, they also feel it's in peak inflationary expectations. 65% of those surveyed said inflation is indeed going to be transitory, and 84% did say they felt there was going to be tapering before the year end. So a mixed bag, but again, playing into the peak everything story. The China stock story, I think, is a very important one because you're getting a double-barrel shot here from both regulators on both sides. You heard about the China regulators drafting guidelines to prevent the internet companies from engaging in anti-competitive practices. But of course, Gensler's broadside, which he released late yesterday in a video, Gary Gensler, the SEC, specifically saying, let me just make everybody aware, and we all are aware of this, that you actually don't own a Chinese company, that when you buy a Chinese IPO here in the United States, you're actually owning a shell company, more likely in the Cayman Islands. And that's a quote from Gary Gensler. And he's actually asked the SEC to pause on any new China IPO listings until they meet the regulatory disclosures about risks that he wants them to engage in. So, Carl, what you've got here is another continuing double-barrel move from the regulators on the China side and on the U.S. side, and you see the pressure that's putting on the Chinese stocks. Carl, back to you.
All right, Bob, thank you.
Yeah, that was a great breakdown. I appreciate that. I like that one. No kidding though on Chinese stocks. The Chinese stocks are definitely, something to watch out for. And they've been burned so much. We keep asking ourselves. I remember folks were wondering. Alibaba was like 230. Oh, should we buy the dip? I'm like, I don't know. I don't want to buy the dip. I'm like, oh, Kevin, it's at 210. Should we buy the dip? It's oversold. I'm like, yeah, I don't care if your RSI says it's oversold. I don't know. Oh, Kevin, it's under 200. Should we buy the dip on Baba? I'm still not convinced. I want to buy the dip. Darn thing's at 177 now. Oh, but should we buy the dip now? Nothing's changed. And like Neo's my exposure to Chinese stocks, and that's enough for me. That's enough. So look at AMC, a nice move here, 4.26% here. Very nice. Look at that. Pushing right up to this line that we have here, 37.42. Look at that bounce off that line. Oh my gosh, you can't even make this stuff up. See, unlike the day traders who kind of record their screen and like see, or no, I'm sorry, not record their screen. They do the playback afterwards, right? That, well, we saw this happen yesterday. It's kind of like that. Well, we saw this happen, so therefore now it's going down. It's like, well, look, we know you can record after the fact. Everybody can describe what happened after the fact. That just happened live. I love it. Anyway, So what else do we have? Moderna. I still shocked by Moderna. Etsy's actually moving up a little right now. That's incredible. Etsy sitting at 192. Part of me is tempted to look at my Etsy leaps and just say, Etsy, it's time to take a little bit of them tendies that we got with what we got here. But boy, oh boy, it is an interesting time because we are in this sort of inflection point of, well, if consumers stop spending, then maybe Etsy leaps are not what you want right now. Let's see. You know what we should do is let's look at website analytics for Etsy and maybe like Peloton and some of these others here. So give me a moment. Let's pull this up. Let's do it together here. What's another one we should look at? Etsy. We've got online spending coming. What makes you think that? Well, let's see. Let's look at the website analytics. I don't know. Amazon's too hard to do. We could do because their website rank is already so high or so strong. Okay, let's see here. Let's go with Etsy, Etsy.com. It's stable throughout the summer here. It's kind of flattish. It's certainly nowhere near what we had at the beginning of the year, but flattish here. SoFi, that's SoFi is pretty app based, so that's not bad. It's not bad movement by SoFi here. Or let's do, I don't know, what's another one here? Oh yeah, one Peloton. And then we'll go back to the sticks. Let's try it. Yeah, it's not good. It's not a good sort of rotation to the downside here. All right, so we are, see, this brings you to February. All right, let's see what else. All right, let's go over here. So what do we got here? 23andMe still running. Volatility still up. Well, yeah, no kidding. We've got, Etsy up about 0.5%. Peloton up about that 0.5% here. AT&T towards the downside. Still sitting at Arcimoto and Roblox leading to the downside. Market feels pretty stable right now. Well, you can see Tesla slipping nicely. Now down at 663. Lemonade down to 69 right now. SunPower. Ooh, SunPower. Let's see if we got an opportunity here yet. Oh, we're getting close. Look at that. SunPower. Now we're talking about now we're talking, okay? Like, look at that. We are almost at that May low. We had a May low of 1975. SunPower right now sitting at 2119. Look at this disaster of a stock chart here. I mean, this is just a crisis of oh my gosh, euphoria, and just all bleeds out. It's intense. Let's go to Canadian Solar. Not as bad of a crisis, but you're actually also getting close to sort of a May reaction here. May, we hit a low of 34.18. Right now, we're sitting at 35.55. DQ, same thing over here. Of course, a little more Chinese exposure here on DQ. And let's see, Sunrun is another one we can look at. Yeah, also trending towards that. What about Solar Edge, the inverter manufacturer, really hit by them chip shortages? Solar Edge actually doing the best almost out of these. The furthest away from our May pricing by a lot, actually. 197 to 268. Got a ways to go here on Solar Edge. Let's see here. Let's go to Enphase. Okay, 162 on Enphase. I would love to see a revisit here to this 120. Whoa, what I would give to just buy Enphase again at 120. It was great. It was just such an opportunity. Thoughts on Michael Burry shorting caffeine? I think the guy is a genius marketer. It's genius. It's very, very good marketing. Look, Cathie Wood is heavily shorted because it's the easiest way to short. Think about it. The easiest way, like if you wanted to short overvalued, high potential growth companies, innovation companies, just short RK. It's so easy. Just go in here, sell. I wonder if it'll let me short it on Webull. That would be funny to see. Sell. Yeah. You can. You can short it. Current borrow rate is 5.75%. Well, see? You short it. Let's see here. It'd be... What we should do is we should pull up the short interest percentage, because it used to be like, gosh, it was so popular to short Kathy in February, March. But let's go ahead and go to the Black app here and get some short interest data. See what we can learn. So again, the latest I remember was like 11%. He hates innovation. That's a good one. I don't know about that. He's trying to be a contrarian is what he's doing. You know, and all it takes is that big hit where it's like, oh my gosh, he was right. But so you just make these wild guesses sometimes. All right, so let's go to ARK. Okay. So RK is 12.96% short. Look at that. It's the most short that we've seen in a while here. Let's see if I can zoom out a little more. Let's go out to 90 days. No, you know what? Let's go to year to date. Let's see the year to date chart on the short interest percentage on Kathy. Oh my gosh. Yeah, look at this. So right above my head here, we started the year at pretty much zero short. And look at this. February was short Kathy in April, short Kathy in May, and it's just been trending up. And what's interesting is these were bottoms. You know, there were bottoms here at the end of Feb, April, May. These were pain points in the market. So it's not a surprise to see that shorts were at the same time also going up. Yeah. Crazy market. All right. AMC 3.39%. So not much action over here. This is pretty consistent right now. Domino's up about 0.5%. Etsy up about 1/3%. Sitting at 191. Arcimoto's getting hosed at 14.81% to the downside. Roblox at 5.37% here. Canadian Solar also getting burned. Canoe, another 4.41%. Not in that one. We got Lemonade sitting at about 69. Okay, let's go ahead and see what other headlines we can get out of here. So let's go to, I don't know. Let's try the NYT. So race to evacuate continues. Yeah, this is I'll make another video on my thoughts. There were a few people who had some questions on some of my thoughts there. So yeah. But I encourage you to get as much perspective as you can. So a third wave in India still looms. American hospitals buckle under Delta. Well, that's not good, because look, these are the kind of headlines that they lead to lockdowns. Yeah, Roblox shares down 5.4% after lower than expected bookings. It also makes me nervous that that you are starting to see this decline in gaming for stocks like Corsair. And look, I'm not here to like bag on Corsair, but people keep asking me like, "Oh, Kevin, when are you gonna buy Corsair? The PE ratio is so low." I'm like, I don't care about your dumb PE ratio. Take your PE ratio. Okay, I'm not gonna say it. But PE is nothing more than the market's expectation of growth. It's nothing more than that. And unfortunately, with gaming, you are seeing a little bit of a softening here. Anyway, sorry, where was I? Thank you for the rose. I appreciate it. Say it. Jeez, funny. Expectations on Nvidia earnings. We'll look at that in a moment. So hold on a sec. What do we got here? Oh wait, hold on. We just had what is this? Housing index came in at 75 versus 80 expected in July. Yeah, housing market index. So a little softer than expected. So that breaking news just came in. I mean, for what it's worth. I mean, bro, breaking news. The housing index came in a little lower than expected. Whatever. Okay, so where were we? Summer surge in. Hey, where'd Twitter go? I'll figure it out. Okay, here we go. So the summer surge in COVID cases in the United States, led by the domination of the Delta. Okay, reached its second highest. Okay, let's see here. So the number of those patients who are critically ill in the ICUs has risen. HHS shows the number of hospitals with very full ICOs has. I'm sorry, ICOs. Coin offerings. ICUs doubled in recent weeks. Now, 1 in 5 ICUs has reached or exceeded 95% of beds occupied, a level that experts say makes it difficult or impossible for health professionals to maintain standards of care for the very sick. Oh, ooh, look at this. The South is just getting destroyed. Oh, this is horrible. So this is actually, can we see this? No, they don't let you hover on the map to see the county. But it's very interesting. Sort of inland areas here in California. You've got obviously Texas here. I mean, this I'm not the best at geography, but I would say this is the Austin area, and Louisiana, Alabama, Georgia. Mid Florida. This is like the Orlando area here. Miami actually better, and Key West over here. But yeah, that central Orlando to just below Tampa area. It's interesting. So and this is, yeah, that's not so good. Oh wow. But you know, it's very interesting because folks look at this as the South's winter, right? Because it does get warmer in the winter. But what's I'm sorry, it gets so hot that people essentially go indoors, right? It's kind of like the North goes indoors when it gets so cold. But it's very interesting because you're not seeing that same thing in Vegas or Arizona, where it also gets hot. So you're seeing more of that here in sort of the Southeast. Anywho. So yeah, this is not so good. These numbers not so good. Hawaii as well. That's interesting. Yeah, the United States as a whole, not good. Okay, see here. Let's see here. What is this here? All right. Sentiment is very negative. Yeah, I see that. U.S. stocks extend fall. Dow Jones now down 1%. Yeah, no kidding. Yeah, the Dow is down 1.01. All right, let's see what else we have with the ones we've been watching here. Yeah, Arcimoto's sort of been our little barometer here for pain. And that one does keep getting a little worse. 23andMe softening a little bit, volatility moving up again a little bit. All right, let's go find some other news. I was just surprised Etsy's up 0.5%, honestly. Let's go to Journal. Oh yeah, somebody asked about NVIDIA expectations. You know, I don't really know. I don't track NVIDIA. I personally believe, and I mentioned this, I think I mentioned this in the course member live stream yesterday. I think it was the course member live stream yesterday. Yeah, because yesterday we did a makeup course member live stream. It was like, I don't know, it was like 5 p.m. or something like that. Which actually some of you like, because sometimes some of you can't make it in the morning, so that worked out. But anyway, here, let me see what Bloomberg says. But in the meantime, look, I mentioned earlier, I think people want the chips, but the capacity for paying these higher prices is going to, I think, limit their ability to raise prices, which could soften their margin, because I don't think that they're going to raise prices so ridiculously. But let me see here. I think if I just type in EE, earnings and estimates, yeah, there we go. So let's see what it says. All right, so right now, see, what's very interesting is that you have beat on EPS, revenue, and net income 8 out of the last 8 times. So NVIDIA is just on a killer track of triple beating, right? It's very good. But what are we expecting here? So Q2 2022, when is it? Next announcement is tomorrow. It looks like after the close, yeah, 420. It comes out at 420. I don't know why that's funny. Yeah, I do. Okay. Anyway, then we're expecting EPS to come in at a buck, about $1.01. Really? That low? Okay. Revenue to come in at 6.33 bill, and net income to be 2.57 billion. Golly, they just crank money. They must just have a ton of shares outstanding as well. So, I mean, obviously the market is expecting a beat. The market's assuming a move of between 3.6% and 5.5%. I think it's incredibly expensive. But right now you've got 37 analysts calling it a buy, 6 call it a hold, and 2 call it a sell. Oh my gosh. Everyone who just wants to own NVIDIA. That's just crazy. Oh my gosh. No. Nicholas, I see you, man. What's your beef? What you got, man? You back off my accents, Kenneth, or I'll come over there. I check SCSNR yesterday. Steelcase had an interesting. I don't know what's net revenue. What is AI a buy, or do I need to send it? Oh, I'm still torn on AI. The thing is, here's the thing: AI does not yet have a clear path to profitability. They have high client concentration, which increases risk, and not a clear path to great profitability yet. And in this market, they're a perfect stock to short for companies. Let's see if they're getting shorted. I could be wrong about it being shorted, but I'm just saying, like, it's the perfect candidate for that. I closed the box. I'll open it again for you since you complained. Not that I want to set that precedent. Walmart options are printing. Oh, a news release on Steelcase. NR news release. Oh, thought we were talking about like Netherlands equities or something like that. Oh. I like Steelcase, by the way. In fact, I am sitting in a Steelcase chair. Steelcase. That is a Steelcase desk. This is Steelcase, the one that I'm using. So yeah. Okay. Where's my sponsorship? So let's see. AI. It's not sponsored. What is sponsored are the amazing programs linked down below. And of course, you're getting your free stock public by going to mettkevin.com/public. No, C3AI is only 6.65% short. It looks like as the prices come down, the short interest has fallen. No, it was much higher on the short interest percentage earlier. But anyway, yeah. Okay, so all right. Let's see what else we have here. Let's see what CNBC has for us, if anything.
Government stimulus type things that they've certainly been helped over the last couple of quarters from other forms of stimulus that we've seen on our tracking over the last 2 years, since really April of last year, over $1 billion in stimulus. That helps Walmart, but also things like increased SNAP, et cetera, that will help discount retailers, Walmart, dollar stores, et cetera.
Discount retailers.
So, Michael, whether it's the earnings reports we got this morning, the retail sales, which was a much bigger miss than expected, and then the fact that we have more names reporting as the week goes on, I guess key trends for investors, or specifically key names that you would be invested in as we do get more of these results.
Ooh, let's listen.
Yeah, well, if nothing else, the bars will set a little bit lower for lows tomorrow. And again, we think that we're estimating down 3% on the comp line, and we think they should be able to hit that. And we like the margin story there. We think Target has been a share gainer, and it's been obviously a very strong stock, but we like it here. Within the retail sales numbers, say consumer electronics on a year-over-year non-seasonally adjusted basis actually look pretty strong. And to us, that suggests a beat for Best Buy when they report next week. One other one, BJ's. We think BJ's is doing a great job and it's positioned themselves well during this pandemic.
Okay, I just have to say, Target. Dude, Target has killed it. Look, I held Target from like 70 to 150. I made lots of money on Target. But it's at 267 now. That's crazy. Why would I buy it now? It's had an insane run. There are plenty of things that I can buy that haven't had this insane run. I don't know. I apologize. If we're going into the direction of lower sales and lower consumer spending, then yeah. That's interesting. Jason Twig, the intelligent investor. Basically, everyone who's on a ventilator is unvaccinated. Yeah, there is a big movement of people who are unvaccinated. Gosh, I was in Sacramento yesterday. I didn't attend, but I saw this massive rally on it was an anti-vax rally. And it was really interesting because people would drive by and they would honk in support of it. But somebody made this joke, which I don't know if it's a good joke. It's probably not. But I'm just going to mention it because it's contextual. A bus driver, like a city bus, drove by. It started honking at the rally. And people like, don't want to go on that bus. And I'm like, my gosh, it shows like the difference of some thinking. But whew. Anyway, yeah, geez. All right, so let's go back to some of the sticks here. So Etsy, wow, it's now up 1%. Etsy's up. We've got. I'm surprised. Etsy just went up more, and the volatility index just almost doubled. Etsy's up more. 23andMe is up more. DoorDash is coming up a little bit. Moderna's coming up. It's up 3%. AMC's up 4%. Towards the Arcimoto's back in the toilet here. 18% down. 626 on Canadian Solar. Open Door slipping a little bit more. Solar. All of these guys. Look at these spark lines here. Just down. That's kind of kooky right here. Yeah, look at this. Enphase. Oh, Enphase just got smacked. Oh, sweet. So somebody yesterday was asking me, that minor position I have here in Enphase. That's actually cool. Wait a minute. Look at that. Look at the last time I bought Enphase on Webull. I have most of my Enphase shares elsewhere. But look at the last time I bought Enphase on Webull. It was 125. And it wasn't that long ago, folks. It was over here. It wasn't at the dead bottom, and I want to say it was like the 10th or something like that. It was around 125, right there, 120. Yeah, but anyway, I want to see that. I want to see this. I want to like lower that basis. Yeah. But anyway, somebody was asking me, oh, should I sell some puts at 170? And I'm like, why would you do that? Like it's on a downtrend. Why don't you just wait a few days? Yeah, downtrend continuing. Anyway. Let's see here. Yep. All right. Yeah, I see some of you asking about the election. What's going to be very interesting about the election is young people turning out or not. It's not that hard. You just have to fill out a stupid mail-in ballot. But young people are the biggest voting demographic right now, but they're also the least likely to vote. So young people could literally turn out and destroy old people in the polls. Not that there needs to be a young versus old fight. Just saying. Like, I don't discriminate. I don't care. But I think it's very interesting. All right. What else? So what's happening here in the middle land? Oh, Cardano rotating down a tiny little bit. U.S. about 5,000 to 9,000 passengers a day can leave the Kabul airport. Kabul airport remains secure for military flight ops and limited commercial flights. All right. That's so sad. All right. Square 259. Simon Property Group rotating down a little bit. On talk of sales declining in the retail space. Bitcoin, BYD, Salesforce, Visa, Piton. Okay. Let's see here. AMC's doing great. Got to hand it to AMC today. Let's see how. Look at this. Let's see if we bounce off the line again. It's just perfect. Volatility index still up. Let's go see what else we have here, though, in headlines. Now, remember to get your free stock by going to metkevin.com/public. They will not buy or sell your information like other brokers do. It's a great way to share your social purchases if you want. You don't have to. And, of course, check out the programs link down below. This, of course, was our big heading here. We did review this. So we talked about Walmart, talked about the sales, talked about Delta, surge in cases, worse than before. Yeah, this is interesting. Let's take a peek at this for a moment. See, this here could potentially buoy lower spending. Let's see here. Investors bet that corporate spending and buybacks will support stocks. I don't know about that. Let's see. Investors are betting that cash-rich companies will will increase spending on everything from factories to share buybacks. A combination many believe will boost stocks in the coming months. I mean, it's possible. You even had Enphase do a bunch of buybacks in May, but that was also when their price was in the hole. I mean, you literally had a board that bought the dip there. I mean, that was impressive in my opinion. That I very much liked. Yeah, that was good. Hoard of cash held by U.S. companies is a key comfort for U.S. investors, despite worries of the spread of Delta that could dent the recovery. Yeah, no kidding. It's true. There's a lot of cash. I mean, look at this. Look at the amount of cash at companies. Oh my gosh, it just skyrocketed after the pandemic. Well, during the pandemic, I should say. That's an interesting thing to keep in mind. I mean, look, yeah. I said, what would you rather have? A cash-rich company or cash-poor company right now? I think that's a no-brainer, so no real surprise there. All right, I don't think that's too insightful. That is a little boring. Workout clothes, okay. New Zealand orders lockdown. First, see, I think this is so interesting. New Zealand orders first lockdown after first COVID-19 case in 6 months. When that case was announced yesterday, I was reading about it. The case was announced, and the NZ, the Kiwi, their money, immediately fell because they're like, oh, that's it, lockdown's coming. And sure enough, the lockdown was announced. All right, let's see here. All right. Well, I think that's probably good for right now, unless Bloomberg's got a header here. Let's see what we got. One case and she shuts down. Yeah. Why does a rocket mortgage always sell off? People don't want mortgage companies right now. I don't know. I don't know why. I don't know why. Yeah, NSAID has been really good at keeping those cases low. I mean, they do go crazy with the lockdowns when cases do spread. But I mean, it's been working for them. And a lot of folks there, it's like they don't have to wear masks. They don't have social distancing. They don't have to do anything because it's just COVID just doesn't exist there. But then again, they're an island, so it's a little easier to isolate. I think I heard when you go there, you have to quarantine for 2 weeks before they even let you in the country. All right. Kathy Wood responds. Oh, wait a second here. Kathy Wood hits back at Michael Burry. So we heard that Michael Burry is shorting Kathy Wood's ARK Invest, which is not a surprise. We have seen the short interest percentage skyrocket at throughout this year of Kathy Wood's ARK funds, specifically ARK Innovation. In fact, if we go to let's go to the year-to-date chart on ARK K here, we could see just above my head here, this chart showing ARK basically going from next to no short to as high as 13.86% short at one point, presently sitting at 12.96% short on ARK. It's really, if you want to short innovation, you want to short high PE stocks, Kathy's a great one to short if that's what you wanted to do. So let's see how Kathy responded. Kathy Wood laid out her case for why her firm has for months been pairing holdings tied to Chinese tech holdings. Okay, well, Now, I want to hear the response to the Michael Burry part, not the I was right. I'm selling Chinese stocks. The superstar fund manager also rebutted investor Michael Burry. There we go. After he bet against her. Here we go. I think that China-U.S. saber rattling, which has intensified under this administration, a surprise to me, is bringing more activity back home. Okay. Yes, this is true. We thought conventional wisdom was that Chinese-U.S. relations would actually be better under Biden than under Trump. And they've actually been worse, which it was a big surprise. So, yeah, that is true. That was a surprise. All right, then the supply chain reorganization is going to be positive for the U.S. and it'll be somewhat negative for China. In a tweet Tuesday, she also hit back at Burry, the Big Short, or who got famous through the Big Short in 2000, in the 2008 financial crisis. But anyway, okay, here let's see. Owns a bearish put contract against 235,000 shares of ARC Innovation. Wood said in her tweet that she doesn't think Burry understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. Did she really say that? She said she doesn't think he understands that. I mean, I personally think he understands it. I think he's trying to go in and out. He's trying to trade this stuff. He's back on Twitter, by the way. I guess. Is he? No, I don't know if that's actually him because he keeps because usually I don't know. He keeps deleting his Twitter. Let's go to Kathy. I'm gonna assume that's not him. Okay, so Kathy, yes, she did. Look at this. Hold on. This is the second row of tweets here. Oh, we've got a lot of tweets here. Let's break this down here. Look at this. Most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations. Despite what we believe has been a supply chain related short-term burst in inflation, both equities and bonds have appreciated since March. Unlike the tech and telecom bubble, this equity bull market has broadened beyond the innovation strategies that boomed last year to value in other stocks that trailed. Okay, she's made this argument before. Basically, she's saying, look, when you start seeing the rally go beyond innovation to other stocks like Target or Simon Property Group or Cheesecake Factory or whatever, right? Then that's a sign that when those bubble up, then soon you'll be able to have this cycle back towards tech and innovation bubbling up again, likely more than the others had. But that these things go in waves. This makes sense. The bull market has also strengthened, setting the stage for what we believe will be another leg up in innovation strategies, which obviously right now are kind of in the pooper. The last 6 months have been very difficult for innovation strategies. Since February, ARC has had pain. There's been a lot of pain since mid-February. The equity market is likely to reward disruptive innovation strategies once again when headline inflation breaks or fears of recession increase. Well, that's interesting. These are two things that she's saying. She thinks that we're going to see innovation do well again once we see that inflection point downwards in inflation, which I've regularly talked about, September to October readings, which would be October to November for that downward inflection, but Delta could really delay this, or fears of a recession. So in other words, she's saying maybe innovation stocks could be a flight to safety. I actually have to disagree with her because I think folks fear the potential of higher inflation and a recession, which if you have a fear of higher inflation and a recession, I don't know that innovation is going to be your destination. And that's certainly not what the market's pricing in right now. So I kind of disagree with the second part of the statement here. But anyway, if the bond market is correct, one or both will be obvious during the next 3 to 6 months. What she's saying here is look at the 10-year yield. The 10-year yield's at 1.24%. The bond market is obviously pricing in an inflection point to the downside in inflation. And the bond market could be giving you a heads up of this inflection point coming. Since mid-May, a number of commodity prices have been breaking down. Okay, so now she's referencing this sort of collapse in commodities, which commodities had been seen as this inflection point in inflation to the upside. And that now we're actually seeing commodity prices fall, and that's clearly an indication that inflation is on its way down. This is something that Kathy would believe. Now, this is also true. We talked about this about 2 weeks ago. that car sales are flattening or declining. The Bloomberg, she clearly reads Bloomberg regularly because Bloomberg was talking about this like 2 weeks ago. So this is true. The deflation in commodity prices is cyclical, but is adding to secular forces that caused by technologically enabled disruption. Okay, basically what she's saying is, look, commodity prices go up and down, but because they're going down now, you're seeing them go down potentially with the same time as you have deflationary forces from technology and innovation bringing prices down. This is her arguments about deflation, the different forms of deflation, good deflation, which is innovation, or bad deflation, which is basically like, hey, you guys are going to go bankrupt because your products are old and you suck, and now you have to lower prices because of that. And now you're going to go out of business, right? These are the same arguments we've heard her make many a time, which is fine. These are fine. So far, I agree with everything she's saying. And a lot of this has been written on the wall and written on Bloomberg for a few weeks now. With the exception of this comment here that she believes innovation will do well if recession fears increase. I don't believe in this one. I do believe in the headline inflation breaking, because I don't see innovation right now as a flight to safety asset. I just don't see the market believing that. So if we are correct, GDP and revenue growth will diminish until the opportunities in nascent technologies begin to move macro needles. Okay, now what she's saying is, we're going to see a softening in earnings or revenues at companies until the tiny little baby companies like Nano Dimension start actually making some real money, some big boy money. Got it? I don't know about that. I think it's going to be a while for a Nano Dimension moving the needle. In our view, the seeds for innovation explosion that ARK Invest is dedicated to researching were planted 20 years. During the 20 years ending with the tech and telecom bust. Yeah, so she's made this argument before that basically we're not in another dot-com bubble, that now we actually have the correct technology for a real bubble. I'm sorry, not for a real bubble, for real explosive growth. That is real versus bubble, which is generally associated with fake. Anyway, to his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing mortgage market. I do not believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. No, that's a Kathy slam here. She's basically saying, like, the only reason people care about Michael Burry is because he was right one time during the Great Recession, and it was a big right. He did well. It was great. The fundamentals were screaming, red flags everywhere. But by her saying this, she is flipping the script, basically saying he's not understanding the fundamentals today, and therefore he's wrong. She's saying, look, he was right then about fundamentals, but he's wrong now. Kind of interesting. This is a good Kathy slam here. Kathy's going on the offensive. I love it. Oh, this is like, it's like financial people fighting. They exchange tweets. It's great. Yeah, okay, that was the whole tweet thread there, rather. So very interesting. Nice Kathy Wood sort of slap back here at Michael Burry. Again, and we've covered a lot of these things before, so not a lot of surprises in her tweet here. But we might give this a brief listen here. It's only a minute long. Not a lot of surprises in what she's saying. We've covered a lot of this before. It is very interesting, though, that she's essentially bluntly saying Michael Burry was right about the fundamentals in the past, but he's dead wrong right now. She is digging her heels in. Very interesting. I do disagree with her, though, that people are going to flee to innovation stocks in a recessionary as recessionary fears increase. I think that's not correct, but who knows? We could have a difference of opinion. Okay, let's see here. China's crackdown stunts innovation. Okay, this video clip is really just going to talk about the Chinese crackdown stunting innovation. Okay, we know this. We already kind of got our bottom line from her tweets here. So, very interesting. That's Kathy Wood's slapback for you. Now, remember, take a look at that link down below to get yourself 40% off on the amazing programs on building your wealth and joining me on our private market live streams where we do a lot of Q&A. So, folks, thank you very much for being here. I will see you all in the next live stream. Right now, I got to head on over to the course member live stream. Thanks so much for being here, everyone. We'll see you in the next one.